Good morning, everyone. So today, I think by now you would have completed all the accounting standards. So today we will be doing Ind AS 101 that deals with first time adoption of Ind AS. So this is a standard, though it is coming from IFRS 1 or is the first standard in the 100 series. Typically, this is a standard that is done towards the end because by now you would be aware of the treatment of the various items under Ind AS, whether it is financial instruments, whether it is ESOPs, whether it is business combinations, whether it is employee benefits, joint ventures. All these things would by now be clear to you in terms of how they are recorded under Ind AS. And somewhere or the other, you would also be aware of the distinction from the previous GAAP, that is the Indian GAAP, that is the accounting standard regime that we were following. So, because the knowledge of the treatment under Ind AS and the distinctions from AS both are essential, typically after you study all the standards, we come to understand Ind AS 101. This is having more of a practical perspective. From an exam perspective, you do have questions, but there are more vital chapters like financial instruments, business combinations. All these are your typically, what you can say, highly possible questions. It is highly possible that you will get more and more questions, more and more analytical questions from these chapters. Ind AS 101 does come, but from a perspective, it is limited, it is restricted in its approach. Now, Ind AS 101 applies only once in the lifetime of a company. All the other standards apply on a day-to-day basis. But Ind AS 101 applies only once in the company's lifetime. And that is when there is a transition. That is when there is a transition. Transition from previous GAAP to Ind AS. Transition from previous GAAP to Ind AS. Now, when I talk about moving to an Ind AS regime, this would typically qualify as a policy change. This would typically qualify as a policy change because you were following an accounting framework under the accounting standard regime, which was the policies that you chose based on the requirements of the law at that point of time. Now law has changed, framework has changed. So you will now follow the policies, you will now follow the framework under the Ind AS regime. So this qualifies as a policy change. And because it qualifies as a policy change, you will need to do what? You will need to do a retrospective restatement. You will need to do a retrospective restatement. That means what? When you're preparing the balance sheet, the first Ind AS balance sheet of the company, we'll see the examples as we go further. You will have the current year balance sheet under Ind AS. You will have to restate the previous balance sheet also, because otherwise how will they be comparable, right? You will have to restate the previous balance sheet also. You cannot have a situation where previous balance sheet is under accounting standards and current balance sheet is under Ind AS. That cannot happen. So you will have to prepare current balance sheet under Ind AS, restate previous balance sheet which was under AS to Ind AS, and you will also prepare a third balance sheet, which is always done when there is a policy change. Yes, please. Which is always done when there is a policy change, right? So that is a third balance sheet, which is at the beginning of the earliest period for which the financials are presented, for the earliest period for which the financials are presented. Are we okay with this? Yes. So that is how typically you would be carrying on with your transition activity. Okay. Now, when we talk about moving from AS to Ind AS, when we talk about moving from AS to Ind AS, it is not suddenly that you wake up in the morning and say, okay, so from now on, I will move into Ind AS, and you introduce Ind AS in the system. It doesn't work like that because the complexities are enormous. Sir, कौन से complexities? What are the nature of these complexities? For starters, preference share capital was treated as a part of share capital under accounting standards. Now you will have to treat it as financial liabilities. Okay. Convertible debentures was treated as liabilities. Under Ind AS, it is not just a liability. There is an equity component. You will have to do a split accounting. You will have to follow amortized cost method. When you look at uh, employee benefits, employee benefits in terms of ESOPs. Okay, so that is your share-based payments. So share-based payments, here we follow fair value at the grant date. Under accounting standards, we were following the intrinsic value. So all these things create a lot of differences. If this standard was not there, if Ind AS 101 was not there, you would have a very tough time in doing the convergence because each and every line item, you would have to evaluate, restate right from the very beginning. See, when I talk about a policy change does not happen all of a sudden under the Ind AS framework. I hope you are agreeing with that. A policy change is done retrospectively. And how it is done retrospectively? As if it is always in force. As if it is always in force. For example, just to give you an example, we will do it in detail later. For example, let us suppose the company has issued convertible debentures. These convertible debentures were issued under the Ind AS regime, under the accounting standard regime. After 3 years, the company adopted Ind AS. Now, when the company has adopted Ind AS, you will typically have to do a fair valuation of the instrument from the time it was issued. You will have to accumulate the interest cost, which is based on amortized cost method. You will have to recognize the balance in your reserves. What is the equity component, which typically comes out as a balancing figure. And all these adjustments, you will have to bring it to the retrospective periods. You will have to bring it to the retrospective periods. So this is only one adjustment. Now there are so many adjustments that need to be done. There's so many adjustments. Okay. So now, if Ind AS 101 was not there, you would have to do this painful activity for all items. But Ind AS 101 is there in its place. And what is the benefit of Ind AS 101? There are a lot of exemptions which are given. There are a lot of benefits which are given. There are a lot of exceptions which are given, proxies which are given, surrogate values which are given. For example, when I look at property, plant, equipment, Ind AS 101 says you can take the previous GAAP value for the purposes of Ind AS 101, for the purposes of convergence. Finished. Ideally, you would have to go back in time and do the accounting in line with Ind AS 16, arrive at the value, and then do it, arrive it at the value on the date of transition, and then apply it henceforth. But now, no such thing. This proxy, this surrogate, this exemption, this exception which is there, allows you to take whatever is the previous GAAP value into the Ind AS converged financial statements. Henceforth, you apply. So there are a lot of cases where such kind of benefits are passed on to the preparers of financial statements because the objective is to simplify the convergence. The objective is to simplify the convergence. Okay. So you have the Ind AS framework, which tells you what to do, how to apply a particular standard, what will be the to the actual scenarios that a company faces. Ind AS 101 tells you when should I not fully apply the requirements of Ind AS. When can I use proxies? When can I use deemed cost? All these things are prescribed by Ind AS 101. So 101 exists to make your transition simpler. 101 exists to make your transition simpler, to ensure that you can do a transition faster. You can do a transition with as less hassle as possible. Okay. So with this background, let us move on to Ind AS 101. Is it okay, Sanjay? Any doubts? Yes.
Clear.
All clear? Okay, fine. So now when we talk, so now what I will be doing is this standard will primarily be running through with your study module only. Okay. So if you have the module, you can keep it open for your reference. Okay. I think largely even I'm referring the May 2026, the latest module that's applicable for the May 26 attempt. I think the previous modules also largely they are aligned. You may just find some page number changes here and there, but largely they are aligned to what is the latest module. Okay. So when we talk about definitions, what do you mean by first Ind AS financial statements? Okay, fine. So the first Ind AS financial statement. So this is, I think, page number 14.3. The first annual financial statements in which an entity adopts Ind AS. First annual financial statements in which an entity adopts Ind AS. In which an entity adopts Ind AS. How should it adopt? By an explicit and unreserved statement of compliance with Ind AS. This is very critical. When you are preparing the financial statements for the first time under Ind AS, the converged financial statements must contain an explicit statement of compliance with Ind AS. All Ind AS, not one, not two. You cannot say subject to not fulfilling the requirements of Ind AS 109. These are complied. No. Because many times what happens, we come from an audit background. So what do you see is not applying an Ind AS is not giving a material misstatement. You come from that thought process. एक Ind AS नहीं होने से क्या फर्क पड़ने वाला है? Okay, so you come from that thought process and you say we will give a subjective, uh, uh, a reserved statement of compliance. We will say subject to not complying with this. Here are our first Ind AS financial statements. No. You need to give an explicit and unreserved statement of compliance. In fact, I have even seen cases where financials contain, we have made effort to comply with all the requirements of Ind AS. If there is any non-compliance, it is unintentional and immaterial. You are giving a disclaimer like how it comes in the movies in the beginning, right? We are prepared, we have presenting this movie, it has no what you can say, no references to reality. If there is any reference, it is only coincidental. You are giving such kind of a reservation in the financials that we have tried to comply. If there is any non-compliance, it is unintentional. You cannot do that for financial statements, right? You cannot do that for financials. You are supposed to comply completely. Okay, so when we look at this, compliance is required with all Ind AS. Partial compliance is just not enough to make the entity Ind AS compliant. Are we okay with this? Okay, yes. So you can understand this. Now we move on to the next important definition, that is date of transition. That is date of transition. Okay, fine. Any doubts? Okay, fine. Now, date of transition. See, I will be doing the key definitions, the key points. Okay, rest all I think they are manageable for you to study at home and come. Okay, so what I will be giving is a wholesome picture of Ind AS 101 along with questions that we will solve. Okay, rest are all just tiny tidbits that you would definitely be able to read and understand. Okay, so we have completed the first definition. Okay, next. Date of transition to Ind AS. The beginning of the earliest period Look at the way the wordings are. The beginning of the earliest period for which an entity presents full comparative information under Ind AS in the first AS financial statements. In the first AS financial statements. Okay. So now let us suppose 2025-26 is the year when I decide to present Ind AS financial statements. Fair enough. 25-26 current year जो चल रहा है, this is the year I am converging to Ind AS. Till 24-25 I was under accounting standard regime. Now, when I talk about 25-26, that will be under Ind AS for sure, no doubts. So when I look at my balance sheet, I will be preparing a balance sheet as at 31st March 2026. Agreed? This would be under Ind AS. Correct? This is the first year when I am adopting Ind AS. Comparative has to be presented, so 2020-25. Remember, this is already presented under AS. Now, can I keep it under AS? Answer is no. It has to be comparative. So I cannot keep it under AS. I will have to move this also to Ind AS. Are we okay with this? Yes, are we okay with this? Next, when I look at my P&L, 2025-26 will go under Ind AS. Yes or no? 2024-25. This was under AS. Yes, this was under AS. But I will do a retrospective restatement and bring it under Ind AS. So far, are we okay? Yes. So far, are we fine?
Yes.
Okay. Now look at it. Date of transition is the beginning of the earliest period. Which is the earliest period in this financials? 2024-25. Beginning of the earliest period for which an entity presents full comparative information. Between these two, earliest period is 24-25. So the beginning of the earliest period is 1/4/2024. Yes or no? Earliest period is 24-25. Beginning of earliest period is 1/4/2024. Yes or no?
Yes.
So you will prepare a third balance sheet and take all your transition effects as on 1st April 2024. Typically, it would go in the reserves. Whatever are the impact of the adjustment, generally it would form part of reserves. Okay. So when I restate opening balances on 1st April 2024, those opening balances will be my beginning for the purposes of preparing the balance sheet and the P&L for the year 2024-25, and that would be a carry forward to 25-26 as far as the basis of preparation is concerned. Are we okay with this? Yes?
Yes.
So, though I am adopting Ind AS for the year 25-26, what becomes my date of transition to Ind AS? What becomes my date of transition to Ind AS?
1st April 24.
1st April 2024. Absolutely right. Okay. So that resolves your date of transition to Ind AS as far as this definition is concerned. Very, very critical definition. Okay. Very important. You cannot say that my date of transition is 31st March 26. No, it isn't. You cannot say it is 1st April 25. No, it isn't. You cannot say it is 31st March 25. No, it is unequivocally 1st April 2024. Okay. All right. Next. You can go through this illustration. X is required to adopt Ind AS from April 1, 20X1 with comparatives for 1 year, that is X0, X1. So same case, you will prepare your Ind AS balance sheet for X1, X2. So there will be a comparative X0, X1. So what will be your date of transition?
1st April 20X1.
20X0.
X0, X0.
20X0. Okay. So the beginning of the comparative period will be April 1, 20X0, which will be considered as the date of transition, which will be considered as the date of transition. Okay. Now, understand. Sir, will it always be the beginning of the previous year? Answer is not necessary. You have a company like physics wala, for example, or you have a company like Zomato, that is eternal, all these companies. Okay. See, typically these were your what you call as loss-making entities for a quite long time. So let us assume that they do not meet the criteria for transition. So net worth criteria of 250 crores is not met. None of it was met. So they were preparing their accounts under the accounting standard regime. Okay, and they did not go for a voluntary adoption. Now they made some profit, and because they have a pervasive presence, they are universal in their requirements, they decide to go public. Now, because they decide to go public, entities which are listed or in the process of listing, you will have to follow Ind AS. Yes or no? Bolo.
Yes.
Now, if they are going into listing, they will be preparing the financials for the latest year under Ind AS. Now, because they are going under listing, they have to issue a prospectus. Yes or no?
Yes.
Now, that prospectus should contain financials for the prior 5 years. Yes or no? Under SEBI requirements. Yes?
Yes.
So, I will have to restate each and every financial in line with Ind AS. It is not just the immediately preceding year. It will be right from the beginning of the 5 years. So the previous 5 years financials have to be restated under Ind AS. So your date of transition will be the beginning of the fifth year, fifth previous year. That will be the date of transition. Then you will change the fifth year, fourth year, third year, second year, first year, and current year. Are you okay with this?
Yes.
Yes. So that is how you will have to view your date of transition. Okay. That is how you will have to view your date of transition. Okay. Next. Okay. Next. We shall look at previous cap. So this definition is done. This 2 and 3, you can do it for homework. Okay. It's just to read it up. Okay. First Ind AS reporting period. In our example, it was 25-26. So the latest reporting period covered by an entity's first Ind AS financials. Okay. So this is also done. Deemed cost we will see with case studies. What do you mean by deemed cost? So abhi ke liye don't worry. Previous cap. Okay. Now, when we talk about previous cap, what is previous cap? The basis of accounting that a first-time adopter used for its statutory reporting requirements in India immediately before adopting Ind AS. Very simple. What was the reporting framework in place? What was the reporting framework in place before adoption of Ind AS? Immediately before adoption of Ind AS, that becomes your previous cap. That becomes your previous cap. Let us take the case of a company which is listed both in India as well as in the United States. Both in India as well as in the United States. Now, Because it is listed in India, it follows the accounting standard regime for its MCA corporate filings. Okay. Now, because it is also listed on the NASDAQ in the US, it will prepare its financials under the US GAAP framework. Under the US GAAP framework. Now, for the purposes of previous GAAP as defined under Ind AS 101, what will be the previous GAAP? Will it be the US GAAP that was followed for reporting in the US, or will it be the Indian GAAP which was followed for reporting to the Indian Corporate Affairs Ministry? What would it be?
US GAAP.
No, US GAAP is for reporting outside India. Look at the words. The basis of accounting that a first-time adopter used for its statutory reporting requirements in India. In India, though, I was following accounting standards, which is prescribed under the Companies Act. US GAAP I would do because US requires it. Because US financials have to be prepared in accordance with US GAAP. Are you able to follow?
Yes.
Yes. So the previous GAAP is going to be the accounting standard regime, which was followed by the companies for the purposes of complying with the Companies Act. Are we okay with this? Yes?
Yes.
Okay. For instance, companies required to prepare their financial statements in line with Section 133 of the Companies Act shall consider those financial statements as previous GAAP financial statements. Okay. They were prepared as per Companies Accounting Standard Rules 2006. And therefore, those financials will be those accounting standards will be the previous GAAP. Illustration 2. Company B is a foreign subsidiary of Company A. Okay, so A is there and you have B. B is a foreign subsidiary and has adopted IFRS as issued by IASB as its primary GAAP for its local reporting requirements. Local means in the place where it is incorporated. Let us assume it is incorporated in United Kingdom. Okay, in United Kingdom, you have this company which is a subsidiary of A. A is a company which is headquartered, incorporated in Mumbai. Now, B is preparing its financials under IFRS, for local requirements in that place. Okay. Company B prepares its financial statements as per accounting standards specified under 133, read with Rule 7 for the purposes of consolidation with Company A. You must obviously understand when A consolidates B, whose accounting statements will you change to bring about uniformity in consolidation? Will you change the parent in line with subsidiary or will you change subsidiary in line with the parent?
Subsidiary.
Subsidiary. So B was following IFRS for requirements in London, but for the purpose of enabling consolidation into A, it was also preparing financials under the Companies Act and using the previous GAAP, okay, Indian GAAP. On transition of A to Ind AS, on transition of company A to Ind AS, so A to B, A is moving to Ind AS. If A moves to Ind AS, can B say, I will not move to Ind AS? No, B also has to move to Ind AS. So if that be the case, what would be the previous GAAP of the foreign subsidiary company B for its financial statements prepared for consolidation with company A? What would be the previous GAAP?
Indian GAAP.
Indian GAAP, accounting standard regime. That would be the previous GAAP. Okay, no doubt about it. Don't refer to IFRS. Any MNC which is having a base outside India, having a base in India, will prepare two financials. one for its reporting requirements outside India, and one for meeting the Indian reporting requirements. You can look at any MNC. HUL will prepare Indian financials. It always does. But it will also prepare an IFRS based financial for consolidating and for local requirements of the United Kingdom, I think, where Unilever is actually having its headquarters. Not sure. You able to follow? Yes. Apple India. Apple India will prepare locally accounting standards or Ind AS based financials. Okay. But Apple India is a subsidiary of Apple US. Apple US prepares financials as per US GAAP. So these financials also will be prepared for presentation purposes under the US GAAP. Are you able to follow?
Yes.
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 So accordingly, the previous GAAP of the foreign subsidiary for the purposes of consolidation would be accounting standards specified under 133. Read with Rule 7 of the company's accounting standards rules and not the IFRS, since the first time adoption has to be considered in the context of India only. All right. So that resolves illustration 2. That resolves illustration 2. Oh, fine. Any doubts so far? Any doubts?
No, clear.
All clear. Okay, fine. Great. Now, here is a very interesting question. Okay. E Limited is required to first time adopt Ind AS from 1st April 20X1. Okay. The management of E Limited has prepared its financial statements as per Ind AS, and an explicit and unreserved statement of compliance with Ind AS has been given by the management. Okay. However, there is a disagreement on application of one Ind AS between the management and the auditor. Can the financial statements be treated as first Ind AS financial statements? What do you think? The company has prepared the first Ind AS financial statements. All Ind ASs are complied with. This statement they are giving in the financials. Auditor does not agree. So will you still call them as first Ind AS financials, or will you say they are not my first Ind AS because the unreserved compliance is not possible because auditors are having an issue? What do you think? Don't look at the solution. What do you think?
They have given the explicit and unreserved statement of compliance. So I
Correct.
think it would be treated as first time adoption.
Yes. See, what auditor does is the auditor's problem. Okay. It is not the preparer's problem. There may be vast differences in interpretation between the auditors and the auditee. Okay. It is quite possible. It's a matter of judgment. Being a person in the industry, you will be having a better knowledge of the industry than what an auditor could be having. I'm not doubting the auditor's competency, but yes, typically the industry people will have more proximity, will have more feel of the situation on the ground because they are the ones who are exposed to reporting requirements on a constant basis, on a day-to-day basis. Are you able to follow? Yes. So
Yes.
now it is quite possible that you may have taken a particular stand and auditor differs from it. Auditors differs from it. You have all the material on record, all the documentation, opinions, conclusions, basis for arriving at that conclusion. Everything is there to support the presentation, the disclosure, the recognition stance that you have taken in your financials. From your perspective, you have done a great job and it can be evidenced. Now, on the other side of the table, you have the auditor. Auditor is that person who is having access to more material, I mean, not more, access to different material, which contradicts the position that you are taking, which is okay, which is fine. Just because the auditor does not agree with the treatment of one of the items in the financial statements, or it could be two also, number doesn't matter. Just because auditor disagrees, that is not sufficient to repudiate the nature of your financial statements being first set of Ind AS financials. For an auditor, if he believes that an Ind AS has incorrectly been applied, what is the remedy that he has? What is the remedy that an auditor has?
He can state it in the audit report. Maybe he could give qualified
Absolutely
opinion.
right. He can state it in the audit report. That is his document. In his audit report, as a company, you cannot go and sit in his audit report and tell him what to write. That is not something that the company can do. At the same time, an auditor typically cannot have any correction or any what you can say modifications if the financials look okay and they are compliant. If there is any gap, if there is any issue, non-compliance, after discussing with the client, giving him an opportunity of being heard, if still the auditor feels that no, the treatment is not right, and the company is also stuck to its position because it is having particular material on record. If that is the case, then auditor's recourse will be the audit report. But the financials will continue to be the first Ind AS financial statements. Yes? Sir, then what will happen to the qualification? Well, when the company does its ROC filings, it will have to give an explanation on that comment. Which the auditor would have put in his financial statements. Are we okay with this?
Yes.
Yes. All okay. So this question also is done. Okay. Any doubts? No doubts?
No doubts.
Okay, fine. So now, when we talk about preparing the opening balance sheet, what does it mean? There is a general principle. Okay. What is the general principle? Four golden rules. Very simple, four golden rules. And this is coming from what you have already studied. So this is nothing new. Don't think that we are introducing new things. You will be having first rule. Recognize all assets and liabilities whose recognition is required by Ind AS. Recognize all items whose recognition is required by Ind AS. Okay. Do not recognize items as assets or liabilities if Ind AS does not permit such recognition. 2. Number 3, reclassify items that it recognized in accordance with previous GAAP as an asset, liability or component, but are a different type of asset, liability or component in line with Ind AS. 3. Fourth one, apply Ind AS in measuring all assets and liabilities. हो गया. These are the four rules. सर ये फोर रूल बता दिए, पढ़ के सुना दिया, but what about the examples? Examples is what you have already studied. So first one, recognize all assets and liabilities whose recognition is required by Ind AS. Recognize all items which is required to be recognized under Ind AS. Okay. So, for example, recognition of derivative assets and liabilities, for which a different guidance was followed under Indian GAAP, which were not carried in the books of the acquiring entity under Indian GAAP. For example, you people have studied business combination, right? You studied business combination.
Yes.
Yes? Yes or no?
Yes, sir.
Sanjay? Yeah.
Yes.
In business combination, you have studied something known as contingent consideration. Yes or no?
Yes.
What is contingent consideration?
Uh, it's a consideration based on certain conditions when
Based
they
on
are.
certain conditions, which, if fulfilled, would be paid by the acquirer to the owners of the target company. Correct?
Yes.
Now, because it is contingent, under accounting standard regime, would I account that?
The previous regime, no.
No. But now, should I account for it?
Yes.
Yes. How do you do accounting for contingent consideration? You fair value the contingent consideration. Yes.
Yes.
And then every year, if it is there, you will do a fair valuation and do an FVTPL accounting. Correct?
Yes.
Now, this contingent consideration was not recognized in previous GAAP. But now it is recognized because Ind AS requires it to be recognized in the current GAAP. So this is the first example. Items which were not recognized under AS are required to be recognized under Ind AS. So recognize those items. So you recognize those items. Are you okay with this?
Yes.
Yes. Second one. There are some items which was recognized under AS, but you cannot recognize under Ind AS, but you cannot recognize under Ind AS. Okay. For example, Ind AS 115, different thresholds for revenue recognition as compared to AS 9. And hence, an item that is recognized as a trade receivable may not be so recognized under Ind AS. Okay. All right. Now, items which were there as assets or liabilities under previous cap. Ind AS tells you do not account for that. You are not permitted to recognize the asset or liability. In that event, you will not recognize it as an asset or liability under Ind AS. Fair enough. Next, reclassify items. Reclassify items. Under accounting standard, it was recognized, but it was put in some category of asset, liability, expense, or income. But under Ind AS, it has to go under some other category of asset, liability, income, or expense. For example, redeemable preference shares. Where were they recognized under previous GAAP? Preference shares. Previous GAAP. Where did you show it? You would show
Share,
it as
share capital, part of share
equity,
capital.
as part of share capital. In share capital, you would first have preference shares, then you would have equity shares. Now, preference share capital, which is redeemable, compulsorily goes to liabilities. Compulsorily goes to liabilities. So you are keeping the same thing in the balance sheet. Let us assume it is at fair value. You have given a 10-year, you have subscribed to a 10-year preference share with a coupon rate of, let us suppose, 10%. Okay. So that is considerably equal to or around your market value. So therefore, a 10-year arrangement you will get cumulative dividend of 10%. So even if you have missed in 1 year, next year you will get both the years put together. Okay. There is no discretion that is given. So it is only a change in the name, but in reality, what it is? In reality, it is a loan. And therefore, Ind AS requires you to put it as financial liability and not as a part of share capital. Are you okay with this?
Yes, yes. It would be shown
Yes.
as financial liability. Yes.
Financial liability. Absolutely. Okay. All right. And finally, apply Ind AS in measuring all recognized assets and liabilities. This is basically your remeasurement. This is basically your remeasurement. For example, investment in equity shares, investment in mutual funds, investment in equity shares, mutual funds. Under accounting standard, what did you do if they are long-term investment? If they are long-term investment, what would you do? How would you account for that?
Investments.
Investments at what measurement? It would be at cost.
Cost, yes.
It would be at cost. Ind AS. This is not investment in associate, joint venture, subsidiary. वो सब कुछ भी नहीं है. Okay. This is a regular investment that you are making. So what would be the valuation principles?
At
Cost
fair
or
value.
fair value?
Fair value.
Fair value. So when I move from AS to Ind AS, the shares that I have invested in, the mutual funds that I have invested in, they will have to be compulsorily moved from cost basis of accounting to fair value accounting. Are we okay with this?
Yes.
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 Now, this is the general principle that you have to do. This is the general principle that you have to do. Now, just think of it. Just think of how complicated it will be. Suppose no exception, no exemption, nothing was given. Then your Ind AS would stop here only. Your 101 would stop here. It would say, fine, what is to be recognized, recognized. What is to be derecognized, derecognized. What is to be reclassified, reclassified. What is to be measured as per Ind AS, measure as per Ind AS. If this four rules only were there, then it would be extremely difficult for you to do a line by line convergence. Items which are not recognized in AS, recognize it now. How will you make such a recognition? There are chances that you may skip it because of financials mein hai hi nahi. Yes, that is something which comes out of your regular, what you can say, that is something which comes out of your uh, regular accounting. Yes or no? So therefore, to do a line by line convergence would be a Herculean task. Okay, some companies may have done it. I don't deny that. But it is not going to restrict you to financials. You will have to look at all the data, all the systems, agreements, contracts, arrangements, transactions to understand which Ind AS is applicable, which is not applicable. Are you able to follow? Yes. And
Yes.
to avoid such a complexity, you have certain exceptions or exemptions. You have certain exceptions or exemptions. Okay. Now, when you talk about exceptions or exemptions, we have certain specific items. So now onwards, we will be looking at those specific items. We will be looking at those specific items. And with those specific items, we will then move on to what you can say, we will then move on to certain questions. And that will finally give a closure to this particular chapter. Okay. All right. Any doubts? No doubts?
Clear.
All clear. Okay. Fine. In the meanwhile, let us see one thing. There is a question. Okay, fine. Now, let us understand a very simple transition question. Okay, this, sir, हमने तो कुछ पढ़ा ही नहीं, not required. You should be able to do this. Okay. Mathur India Private Limited has to present its first financials under Ind AS for the year ended 31st March 20x3. The transition date is 1st April 20x1. The following adjustments were made upon transition to Ind AS. Okay. For now, just read the question. We'll understand the entries and we'll understand how the things move. Okay. For you right now, think that you don't know any exemption, exception, blah, 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 whatever it is. Okay. You just know AS requires a treatment, Ind AS requires a treatment. Transition ke time pe, how do I give effect to that? That is only the thing that you need to know. You already know AS. You now know Ind AS. I'm just marrying the knowledge that you have. That's it. Okay. Forget exceptions, everything. If the question gives you something, we'll follow that. The company opted to fair value its land as on the date of transition. Okay. Always remember, when you first adopt Ind AS, this is the time, this is the moment of reckoning. Whatever past sins, जितने भी पाप आपके फाइनेंशियल्स में पड़े हैं, whatever past sins you are having, this is like a Ganga Snan for that. This is like a holy bath for all the sins that you are carrying in your financials. Your transitional balance sheet gives you an opportunity to remove all those sins once and for all from your balance sheet. They could be measurement sins, they could be recognition issues, they could be de-reco issues. There could be so many issues under the AS financial statements that you have prepared, accounted, adjusted. All is done. You fought with auditors fought with you. Everything has happened. Ultimately, you prevailed, auditor agreed, auditor prevailed, you agreed. All kinds of things have happened, and your financials have come here. Now you are converging to Ind AS. Under Ind AS, it is a new lease of life. It is an opportunity to, क्या बोलेंगे उसको? It is an opportunity to once and for all put all the old issues to rest and start from a clean slate. This is easily said in academics than in real life. Okay, in real life, even if you choose to clean the slate, you will have newer problems arising. But at least old problems once and for all will end up getting dusted. Okay, so now the company opted to fair value its land as on the date of transition. It can do. Does Ind AS permit fair valuation? Answer is yes. You can go for a reval reserve. Yes. Does AS permit you to do it at cost? Answer is yes. On transition, am I measuring as per Ind AS requirements? Answer is yes. Please go ahead. So the fair value of the land as on 1st April 20x1 was 10 crores. The carrying amount as on 1st April was 4.5 crores. So 4.5 you are making it to 10. That means there is an upward revaluation of 5.5 crores. Yes or no?
Yes.
Yes. So now what entry are you going to pass? Land account debit 5.52. What are you going to credit? Are you going to credit P&L? Are you going to credit retained earnings? Are you going to credit revaluation reserve? Or, yeah, just these three options. What do you think? Should I
Is it
credit P&L? Should I credit reval reserve? Or should I credit retained earnings? What do you think?
Generally, it would be a revaluation reserve.
Generally, it would be revaluation reserve. Should I credit P&L? Answer is no. I cannot make profit on transition. Transition is not a business activity which is yielding profit. Otherwise, what would happen is finance department would do manufacturing of profits and operations team would be sent home. Here, our finance team is extremely talented. They can manufacture profits even without one product being produced. So operations team ko ghar bech do and finance team will manufacture the profits. That is not going to happen. So therefore, any impact of transition cannot go to the P&L. It has to go to reserves. Okay. Now, generally, this would go to revaluation reserve. The generally word holds true if you decide to do a revaluation in the same accounting regime. That means I was in Ind AS. In Ind AS only, I want to change my measurement basis from cost to fair value. Then you book it in revaluation reserve. Under AS also, you would do the accounting at cost initially, and then if you want to revalue, you will move it to revaluation reserve. But here you tell me, are you doing revaluation pursuant to change in accounting policy for land, or are you doing it pursuant to change in accounting policy on account of application of Ind AS?
In application of Ind AS.
On account of applicability of Ind AS. And therefore, this movement, you will not take it to revaluation reserve, you will take it to retained earnings. Any impact that is arising on account of transition, all those impacts, the second effect of that will go into retained earnings. Are we okay with this?
Yes, yes.
So this is the first entry. Land account debit 5.5 crores to retained earnings 5.5 crores. Any doubts? No doubts. Okay. Next. The company has recognized a provision for proposed dividend of 60 lakhs and related dividend distribution tax of 18 lakhs during the year ended 31st March 20X1. It was written back as on the opening balance sheet date. It was written back as on the opening balance sheet date. Okay, fine. Tell me. Proposed dividend. Before the amendment that was made, did I recognize proposed dividend in the balance sheet?
No.
No, there was an amendment. Maybe you may not be aware because this was before your time probably. But initially, क्या होता था? Proposed dividend, when the accounts were furnished, proposed dividend would be recognized in the financials. This was a position way back when we were students. Okay. After that, the law changed. The law said you cannot just recognize proposed dividend. It must be recognized when shareholders approve it. Now, in your financials, shareholders approve the dividend only in the next financial year. 24-25 financials are approved somewhere in August 2025. So proposed dividend can be crystallized only on shareholders' approval. Without shareholders' approval, they cannot crystallize it. Are you okay with this?
Yes, yes, yes.
So therefore, पहले क्या होता था? Proposed dividend would be recognized. Retained earnings account debit to proposed dividend payable. And then typically shareholders, पहले ये ऐसा क्यों था? Because shareholders से कौन पूछेगा? If you want to give money to shareholders, you give it. If you want to take from them, take their approval. But giving to them, why do I need their approval? That was the kind of mindset which was there when AS regime was prevalent. And that was the practice that was being followed. But after that, it stopped. So in this question, provision for proposed dividend with dividend distribution tax is already recognized. So as on the opening date, you will have to reverse that. So how do I reverse it? proposed dividend payable. Yes or no? Debit 0.6. बोलो यार.
Yes, sir.
Dividend distribution tax payable 0.18. To retained earnings 0.78. 0.78. Are we okay with this?
Yes.
Okay. So that resolves adjustment B. Next. The company fair values its investments on the date of transition. The increase on account of fair valuation of shares is 75 lakhs. So what will be the entry? Investment account debit 75 lakhs to
Retained
retained
earnings.
earnings. Yes, 0.75. Okay. Yes. All right. So that resolves adjustment C. The company has an equity share capital of 80 crores and redeemable preference capital of 25 crores. क्या करने का इस information का? What should I do of this information?
I think equity share will be shown as equity share capital and redeemable preference share would be shown as financial liability.
Yes. So basically, this is a reclass. Redeemable preference share from share capital debit 25 to redeemable preference shares financial liability. Are you able to follow?
Yes.
Yes. So you are moving it from share capital to liability. Assuming it is at fair value, no change required. It's just a movement from one category to other. इसको हम लोग बोलते हैं reclassification. Okay. The reserves and surplus as on 1st April X1 before transitioning into Ind AS was 95 crores. So reserves and surplus 95 crores, which represented general reserve 40 crores, capital reserve 5 crores, balance is surplus 45 crores. Are you able to follow? One
Yes.
second. Oh, sorry. 50. 95 minus 45. 50. Yes or no?
Yes.
Retained earnings 95 minus 40 minus 5 is equal to 50. Any doubt so far?
No, clear. Clear.
All clear. Okay. Fine. This 50 is your balance under AS. Okay. Before the effects of these transition entries. The company identified that preference shares were in the nature of financial liabilities. Okay. What is the balance of total equity as on 1st April X1 after transitioning into Ind AS? Show the reconciliation between total equity as per AS and as per Ind AS to be presented in the opening balance sheet as on 1st April 20X1. Ignore deferred tax implications. Did you understand the question?
Yes.
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 So now it's too small to write there. Okay. Equity under Ind AS. Equity under Ind AS. Okay. How do I start with? Tell me, Sanjay, what will be the starting point?
Equity share capital of 80 crore.
Yes, absolutely. Equity share capital 80. Then I will have other equity. In that, there is a general reserve. Yes or no?
Yes.
40. Then you have capital reserve, 5 crore.
5 crore.
Next, you have retained earnings, 50. Yes,
We will have to add other
you will
amounts.
have adjustments. So, first adjustment, land to retained earnings, add land remeasurement, 5.5. Next, preferences, dividend, sorry. Derecognition of proposed dividend, 0.78. Next, fair valuation of equity,
0.75.
0.75. Preference shares is only a reclass. There is no adjustment that is done to that. So 55.5 plus 0.78, 0.75, 57.03. Are you with me? Yes.
Yes.
So 182.03 becomes your equity under Ind AS. Are you okay with this?
Yes.
All right. Now, what is it saying? So this is the first one, equity under Ind AS. Now you need to present a reconciliation. Okay. So reconciliation of total equity. AS and Ind AS. Okay. Equity as per AS. 80 crores equity capital, 25 crores preference share capital, and 95 crores reserves. Yes or no? Reserves and surplus was 95 crores. So this together gives you 200 crores. Any doubt so far here?
No, clear, clear.
We have to reconcile 200 to 182.03. Okay, so let's reclassified as liability 25. Next, add Ind AS adjustments on transition. What is my transition adjustments impact? It is this 5.5, 0.78,
7.03.
yes, 7.03. Does it match? It matches, right?
Yes, yes, matches.
So the reconciliation is also done. Equity as per Ind AS 182.03. These two are matching. Any doubts?
Clear, clear.
All clear. Okay, fine. So that takes care of illustration 6. ठीक है?
Yes,
Yes. All right. Perfect. So now with this, a basic overview is done of 101. Now we move on to the specific criteria. Now we move on to the specific criteria. Okay. Just give me 2 minutes. I'll come. Okay. Okay. So now we move on to the. So this was all the background of Ind AS 101. Now we move on to specific transitory items. Okay. Now we move on to specific transitory items. Just 1 second. Just seeing if any other question I can handle before we begin the transitory item. Okay, fine. Now we start up with specific transitory items. And this is where it starts getting interesting. Okay. All right. Now, first one, what we will study is ESOPs. You remember Ind AS 102? Yes, we had done together.
Yes. Yes.
So, just a brief application of that. Okay. Now, let us take three scenarios. Scenario 1, Scenario 2, Scenario 3. Date of transition. The first date of the earliest period, the beginning of the earliest period for which your Ind AS comparatives are presented. This is in all the three cases 1/4/2020, 2. 1/4/2022. That means you are preparing comparatives for 22-23 and the actual financials for 23-24. You are converging to Ind AS in 23-24. So date of transition is 1/4/2022. Okay. Now, grant date. You know what is the grant date under Ind AS 102? That is 1st April 2015. Okay. Vesting period. What is the vesting period?
During which the options can be exercised.
No, that is exercise period. Vesting period is when they vest.
Conditions are to be fulfilled.
When you are to fulfill the conditions in the vesting period. Okay. They say you have to be in employment for 3 years. That is a vesting period and a vesting condition. That is a vesting period and a vesting condition. Yes or no?
Yes.
So your vesting period is 3 years, 5 years, 10 years. Okay. Exercise period 1 year, 5 years, and let us take 4 years. Okay. Now, on 1/4/2022, on 1/4/2022, you tell me, what is the status of this first scenario? When did you give the option? When was the option granted?
Grant date is 1st April 2015.
Grant date is 1st April 2015. Vesting period is how many years?
3 years.
That means 2015-16, 2016-17, 2017-18. That means by 31st March 2018, vesting period is over.
Yes.
After vesting period, immediately exercise period will start.
Yes. 18-19.
31st March 2019, exercise period also is over. Yes.
Over. Yes.
So
Yes.
vesting period over, exercise period over. Can I say that the life cycle of the option is over?
Yes. Over.
By now, either options would have been exercised or they would have lapsed. Options will not be alive. Correct?
Correct.
So therefore, explanation for this is what? No outstanding options. No outstanding options. If there are no outstanding options are there. How do I come to know? From my financial statements, what is that account which will tell me options are there in the financials? SBP reserve?
SBP reserve. Yes, SBP reserve.
पुराने जमाने में you used to call it as stock options outstanding account. Yes or no?
Yes, yes.
So stock options outstanding amount would be there if options were there.
Yes.
But now options are there or not there? They are not there. So
Not
stock
there.
option outstanding account है ही नहीं. So will this impact my transition?
No.
So therefore, no impact on transition. Yes or no?
Yes.
Because option plan is over. शेयर मिल गए एम्प्लॉइज को, जिनको नहीं मिले वो लैप्स हो गए. Lapsing में you have moved the stock option outstanding account to reserves. So now there is nothing which is pending for you, and therefore no impact on transition. Now second case. When were the grant of shares granted, options granted?
Yes. Same date 1/4/2015.
And when is the vesting period ending?
It ends on 19/20/20.
Correct. 31st
19/20.
March 2020. Right?
Yes. Yes.
उसके बाद एक्सरसाइज पीरियड कब तक होगा?
5 years. That would be
21, 22, 23, 24, 25. Correct?
yes, 24/25.
That means on the date of transition, what is over? Is the option over and out, or option still has life left?
It has life.
Yes. Vesting कब खत्म हुआ? When did
20.
vesting end?
31st March 2020.
That means, can I say that vesting is over before the transition date?
Yes.
That means, can I say that on the transition date, all the options are vested?
But there is exercise period.
हाँ, ठीक है. But can I say that all options have vested as on the transition date?
Yes, yes, they have vested. Yes.
But it is possible that all options are not exercised.
Yes, possible.
That means it is possible that stock option outstanding account will still have a balance.
Yes.
That means, will this have a transition implication?
Yes.
बस only that. Implication क्या होगा will come later. Right now I'm just making you aware of what all will happen. So if vesting has already happened, what is the journal entry that we pass in the vesting period?
Employees' expenses debit to SBP reserve.
Correct. That means, can I say that if vesting period is over, all my employee benefit expenses have been booked under the previous GAAP?
Yes.
Is it okay?
Yes.
So only what is left is exercising. Okay? So we are making a meaningful understanding of the situation. So here, options are vested. Options are vested and could be outstanding as exercise period is still open. And what is the fallout of vesting period? Over employee benefit expenses are already booked on the date of transition. Are you okay?
Yes.
Yes. No doubts. I hope you are noting this down. Okay.
Yes, yes, doing.
Come to the last case. Last case में आ जाओ. When is the grant date?
Same 1st April 2015.
When is the vesting period ending?
It is 10 years.
मतलब 31st March 2024 or 25, right?
25 years.
That means as on the transition date, is the vesting period over or it is still pending?
Still pending.
तो एक्सरसाइज तो भूल जाओ, अभी तक एसबीपी रिजर्व ओनली इज नॉट फुल्ली अकाउंटेड. Yes or
Yes.
no?
Yes. Yes.
So here options are unvested on date of transition. That means, can I say that even after transition, EB expenses need to be accounted?
Yes.
Yes. Recognize EBE after date of transition as well. Is it okay?
Yes. Okay. Yes.
Fair enough. So all the three cases you are aware of. Now, let us move further. Assume on 1/4/2015. What is 1/4/2015?
Grant date.
Grant date. Assume on the grant date, market price is 100, exercise price is 60. So 100 minus 60, we call it as intrinsic value. You remember this?
Yes.
This is not there in Ind AS. This is there in guidance note. Okay, under previous GAAP is equal to 40 on 1/4/2015. What is this 40? This is base for accounting under AS regime. Yes or no?
Yes.
This is
Yes.
your basis for accounting under AS regime. Now, in Ind AS, do I take intrinsic value or do I take something else?
We take fair value.
You take fair value. In Ind AS regime, fair value is considered based on option pricing model. No intrinsic value. Yes?
Yes.
And both regimes, no remeasurement permitted. You can't remeasure your equity. Okay?
Okay. Yes.
So obviously, no remeasurement was permitted. Okay? Both regimes means AS and Ind AS. Okay? Now, cases 1, 2, and 3. Which of these three will have something surviving on the transition date?
The
Cases
third
1,
one.
2. Yes, tell me.
The third one would be there would be these EB expenses still pending to be
Yes. And
recognized.
second case?
Uh, the exercise period is not over.
So ऑप्शन अभी भी जिंदा है.
Yes.
यस.
Yes.
टाइगर जिंदा है, ऑप्शन जिंदा है, राइट? नंबर
Yes.
2, नंबर 3. नंबर 1 में टाइगर हो गया खत्म, राइट? ऑप्शन हैज एक्सपायर्ड इन केस 1. Case 2 and case 3, option is still alive. Option is alive to see the coming of Ind AS. Can I say that? Yes.
Yes.
So therefore, transitory guidance is required for cases 2 and 3. It is not required for case 1. Yes?
Yes.
Okay. Now you tell me, and you will only tell me the guidance. Okay? And you will only tell me the exception. Okay? मैं कुछ नहीं बोलूंगा. I am only putting the story in front of you. You will, out of your own understanding, you will tell me what will be the transitory guidance for case 2, what will be the transitory guidance for case 3, and what will be the exception or exemption that is provided. Okay? Case 2, employee benefit expense is fully accounted under previous GAAP.
Yes.
Yes?
Yes.
That means under previous GAAP, the employee benefit expense was accounted using intrinsic value.
Yes.
Yes. But
Yes.
under Ind AS, you use fair value. Okay.
Yes. Yes.
The option is still seeing Ind AS coming in scenario 2 and scenario 3. In scenario 3, employee benefit expense is also not fully accounted under a previous GAAP. That means there is some employee benefit expense that needs to be accounted under the current GAAP. Yes, under Ind AS. Yes or no?
Yes. Yes.
And so Ind AS requires fair value on the grant date to be considered for measuring employee benefit expense. Is it okay?
Yes. Okay.
So now you tell me, you are an entity in scenario 2, Sanjay. Okay. Now you answer. Employee benefit expense is fully accounted under previous GAAP using intrinsic value. Currently, under Ind AS regime, as far as the ESOP is concerned, there is only one activity which is pending, which is exercise of options. So now you tell me, employee benefit expenses ideally under Ind AS should be booked using which value?
Fair value.
It is booked using which value?
Intrinsic value.
अच्छा, suppose कीजिए Ind AS 101 was not there. What would you do on transition? What would you do on transition? You are moving from AS to Ind AS. AS used intrinsic value. Ind AS uses fair
Fair
value.
value.
तो आप क्या करते हैं on transition? If you are fully
Adjustment.
applying Ind AS, what would you do?
Adjustment.
हाँ, वो adjustment क्या होता? Whatever would be the incremental expense that had to be booked, you would book that.
Yes.
Effect क्या होता? Retained earnings account debit because it is for previous periods, and credit SBP reserve. Yes?
Yes. Yes.
Correct. Are you able to follow?
Yes. Yes. Yes.
Okay. Now, put yourself in scenario 2. Vesting period is already over. Yes?
Yes.
So you tell me now Ind AS 101 is coming and it wants to give you an exception or exemption. Now you tell me, to ease out your work, what would you suggest in scenario 2? Logically सोचो, vesting period हो गया है, exercise is going on. Think logically and answer. Think logically and answer. Can I say that? Can you, as the preparer of financials, say that vesting period is over? Expenses are already booked. Stock option outstanding is already there. So why am I going back in time and raising the employee benefit expense? Can you say that? Yes.
Yes, but there is
वैल्यू
the
अलग है, मैं मानता हूं. इट इज अंडर इंट्रिंसिक वैल्यू, दिस इज अंडर फेयर वैल्यू. बट बॉस, अंडरस्टैंड, was I doing something wrong in the previous gap?
no.
No. I was following the guidance that existed at that point of time. So, as a preparer of financial statements, you will say, why should I restate something just because I'm moving to Ind AS? है कि नहीं?
Yes,
Yes or no? So, you will say that जो बीत गई सो बात गई. What has happened, please accept it. That means employee benefit expenses, which is accounted for using intrinsic value, will be regarded as the value for Ind AS on transition. Did you understand?
yes, yes,
Yes. यानी
yes,
कि जो intrinsic value था, what was the intrinsic value which was used for accounting and bringing the stock option outstanding, that same value will be carried forward into Ind AS. Did you understand?
yes, yes,
Yes.
yes,
And now what are you doing? Now you are only exercising the option. अभी P&L में कोई hit नहीं आएगा. Nothing will hit the P&L now because vesting period is already over. Now it is only utilization of stock option outstanding account. Are you able to follow?
yes, yes.
Yes.
And will
So
we change this nomenclature of stock
yes,
option
you
outstanding?
will change the nomenclature. आपको वो सिर्फ ना वो name change हो गया. Yes.
Yes, and
So
about fair value?
what happened?
Achha, that we said that we don't change it, no? That's
You
over.
will not change. You will
Okay.
not change because you say that यार मैंने मेहनत किया है, my employees worked, I did the accounting based on the regime which was in force at that point of time between 1st April 2015 to 31st March 2020. Now you are coming after 4 years. You are changing in 2023-24. 3 साल बाद उठ के आ रहे हो कि Ind AS is applicable. So why should I go back in time for 5 years and restate everything? I will not restate. And standard also tells, okay, since everything is vested, you will not restate those expenses. That value in stock option outstanding account itself will become your value for SBP reserve brought forward without any adjustment done on account of the movement that had to be done to move from intrinsic value to fair value. Are we okay with this?
Yes,
But this is an exemption, this is an option. There are some people who want to work hard. There are some people who want to do a full transition. There are some people who want to do a full transition. ऐसे लोग क्या करेंगे? Please do the accounting by taking the differential between the intrinsic value and the fair value and take it in the retained earnings
retained earnings.
as on the date of transition. Is it okay?
Yes,
यानी कि there is an option available to take the existing value as Ind AS value. It is an option. You have the other option of full Ind AS conversion. That means हमको तो भाई पूरा Ind AS चाहिए from the day one itself. We will not live in this hybrid world. Today you are finding this, sir, क्या ही फर्क पड़ता है? But in real life, you imagine. In real life, when was the option granted? 1/4/2015. You are converging when? 2023-24. That means you have to go back 8 years in time, find out the fair value on 1st April 2015. उसके लिए पहले valuer ढूंढो. Then you look at the conditions which existed on 1st April 2015. What are the market's condition? How would your share price move? Everything you need to analyze on 1/4/2015 and then determine the fair value on 1/4/2015, and then you would have to take the incremental. In academics, it is very easy because you will be given the value on 1/4/2015, which is the fair value on the grant date. In real life, fair value is not some number that somebody gives you mysteriously or miraculously. It is something that needs to be identified, something that needs to be computed, something that needs to be evaluated and have an evidence for that evaluation. And पैसे भी लगेंगे. You will have to hire an expert, you will have to do the valuation. So nobody wants to do that. Did you understand?
Yes.
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 So for case 2, exemption is there. But if you want to avoid, you can avoid and do the full convergence. This is the first part. Scenario 3, Sanjay, you tell me. What is the case in scenario 3?
The vesting period is not over yet.
Vesting period is
You
not
have
over.
to book the expenses.
You have to book the expenses. So now you tell me, is it correct to give an exemption in scenario 3
No.
or no? That's what I told you. It's pure common sense. Expenses are yet to be booked. So standard says no transition relief in scenario 3. You have to go and find out the fair value on the grant date using the best available data and then do the employee benefit expense calculation. For the period up to the date of transition, take it as retained earnings to SBP reserve. And going forward, take that value and do the employee benefit expense working for the remaining vesting period. Are you able to understand?
Yes.
Yes.
Yes. Yes.
Sure.
Completely. Yes. Sure.
So, transitory guidance. Okay. Now, if there was no Ind AS transitory guidance, remeasurement principles would require measurement as per Ind AS, that is at fair value on 1/4/2015. If no transitory guidance is available. Are you able to understand this? Yes.
Yes.
Now, there is transitory guidance. Transitory guidance है for which cases? Case 2, case 3. Sir, case 1 खत्म हो गया. On date of transition, stock option outstanding is not there. It is vested and exercised. तो बात खत्म. Right? So case 1 के लिए nothing will come. Case 2, this is a case where options are already vested. Stock options outstanding exists. No further employee benefit expenses. Do you agree with this? Yes.
Yes. Yes.
Existing value, which is at intrinsic value, appears incorrect. So you have two options. Applying transition relief, comma, continue previous carrying value as current value for Ind AS, or apply remeasurement principle and go for fair value restatement if interested. This will be from 1/4/2015. From 1/4/2015. Is it okay?
Yes, okay.
Yes. Very clear. Is it logical?
Yes.
Absolutely logical. You don't have to ratify this. Okay, it's plain simple common sense. Okay. Yeah. Case 3. Vesting period is still pending. So EBE needs to be booked for further period. Hence, no transition relief. आपको मेहनत करनी पड़ेगी, right? Hence no transition relief. Based on best available value, restate options to fair value, and then compute EBE for balance period after transition. That means fair value at 1/4/2015. Put effort and compute. Put effort and compute. Are you able to follow?
Yes.
Yes. Any doubts?
No,
No
clear.
doubts. Clear?
Clear.
Okay, perfect. So now let us come to, if it is clear, तो देखते हैं. Illustration 7. There is nothing to be calculated, but you will have to just think and answer. X is a first time adopter of Ind AS. The date of transition is April 1, 20X1. It has given 200 stock options to its employees. Out of these, 75 have vested on 30th November 20X0, and the remaining 125 will vest on November 30, 20X1. What are the options available at the date of transition? So I have two options, 75 and 125. 75 के साथ क्या हुआ है? What has happened with 75 options?
75 are vested.
Vested on the date of transition. Yes or no?
Yes,
And 125 options?
are yet to be vested.
Yes, unvested on date of transition. So now you tell me 75 is equivalent to case 2 or case 3 in our example?
It is vested, but not completely. So it is case 2 actually.
Case 2. And 125?
Case 3.
Yes. 75 is vested but not exercised. Okay, I am assuming it's not exercised because they've said it is open, right? It is given 200 stocks. It is open. So 75 vesting is over, exercise is pending. So what can you take? What will be your transition? Scenario 2. Can I take previous GAAP value? Yes.
Yes,
Transition relief. You can take previous GAAP value or fair value. Anything that suits you. Anything that suits you. Yes or no?
yes.
And in the case of 125, you will have to take only the fair value.
Fair value.
No previous cap value. Is it okay?
Yes, okay. Yes,
Yes. Simple.
yes.
Yes. ये solution पढ़ लेना. It is in line with what we have already discussed. Okay.
Okay, but this was a single contract, I think. So,
Huh. See, single contract, but they may have given at multiple periods, na? See, 75 options may be given earlier, 125 may be given later. They may be two different plans, right?
okay, okay,
They have not given it so nicely the way I showed the example to you, right?
right.
But the moot point is 75 options are vested, 125 options are not vested. So 75 options which are vested, you can take the previous gap value and proceed further. If you don't want, take the fair value. For 125 unvested, employee benefit expense still needs to be accounted, and therefore the accounting will happen only on fair value. No transitory guidance relief will be available. Is it okay?
Yes, yes. Okay.
All right, fine. So we take a 15-minute break. Yes. So
Yes, yes.
first special item is over. Then we'll take the second special item. Like that, I think we have around 7, 8 special items. Initially, only we cover the big ones. Then it's just small items which are there. Okay. 15-minute break. Yeah. So with that, I think we conclude the first special case, that is of ESOPs. We then move on to the second special case, that is foreign exchange. Okay. This is a slightly big one, and I think not very complex. It is simple only, but a little bit of your time would be required, attention, before we start doing this. Okay. All right. Fine. Foreign exchange. So when we talk about foreign exchange, you would be aware that under AS 11, we had two paras, para 46 and para 46A, which are not there under Ind AS 21. Otherwise, most of it is in line with AS 11. Okay. These paras are not there correspondingly under Ind AS 21. These paras were introduced in 2010-11. Okay, so why these paras were introduced? Because in 10-11, in the recession crisis of that time, and also you had the collapses that happened, the exchange rates were extremely violent. Okay, so because of the violence in the exchange rates that were percolating, the impact that was hitting the P&L of Indian entities was severe. It was obliterating your bottom line entirely. Okay. And for that reason, many corporates, they officially wrote to the registrar, to the Ministry of Corporate Affairs, that look, this is a market scenario. This is nothing, this is something that is not in our control. By having just forex gain loss getting accounted in the financials based on AS 11 principles, we may be following accounting standards, but that is not a true business picture, because this is something which is beyond anybody's control. So you will have to do us something, otherwise we are in for a wipeout in the markets as well. And going on that deliberation that was presented by the corporates, these paras were introduced, para 46 and para 46A. Okay. So basically what these deal with is forex gain or loss, on long-term loans, which are essentially nothing but monetary items, Okay. So what is the position under AS 11? See, long-term monetary items, long-term loans, you will have to restate it. Restate karoge, to there will be a gain or a loss. Originally, where would that go? That would get parked in your profit and loss account as forex gain or forex loss. Are we okay with this?
Yes.
This
Yes.
is the default scenario. But by virtue of para 46 and para 46A, we came across an irrevocable choice to avail option 2. Option 2 stems from para 46A. What does this tell? This applies in two cases. Okay. Please note it down parallelly. Okay, this happens in two cases. First case is a general loan. Second case is loan taken for acquisition of a depreciable asset. Loan taken for acquisition of a depreciable asset. Okay. Now, what the para allows is this. See, violent hits in the P&L on account of forex gain or loss. This was what was sought to be avoided. This was what was sought to be avoided. And because this was sought to be avoided, the standard setters said, fine, you will have to do the restatement. You will have to do the restatement because monetary liabilities have to be accounted at closing rate. So you do the restatement, but the differential, the gain or loss, the differential which is there, that differential, you park it separately, accumulate in foreign currency monetary item translation difference account. Do you remember this?
Yes.
You park it in FCMI Okay. This is an account that would be a balance sheet account, but you would then defer it. Defer gain or loss over the tenure of the loan instead of immediate hit to P&L. Instead of immediate hit to P&L. Are you able to understand?
Yes.
Yes. And if I had purchased a depreciable asset, adjust forex gain or loss in property, plant and equipment. In property, plant and equipment. That is what I would do. Capitalize it to fixed assets. Capitalize it into fixed assets. Are you able to understand?
Yes.
Yes?
Yes. Yes.
Okay. So this is the scenario that was there under AS 11. ऐसा सिनेरियो Ind AS 21 में नहीं है. Ind AS और IFRS do not have a clause of deferring, parking it in FCMI, TDA. All of that is not there. So what Ind AS 21 tells? Ind AS 21 tells you have to hit the P&L. Are you able to understand?
Yes.
There is a problem. क्या problem? This choice is irrevocable. Once you go into option 2, you are stuck there. You cannot come back. Okay, you cannot come back. So if you have a loan which is having a forex gain or loss, which is still continuing to be amortized, then that is something which you cannot avoid because it is an irrevocable choice. Matlab, the forex gain loss needs to be amortized over the tenure of assets or tenure of loan. But, but, Ind AS 21 does not allow accumulation in assets or accumulation in loan. It requires immediate hit to the P&L. So this becomes a catch-22 situation. If I follow Ind AS, I will be violating the irrevocable choice. If I follow the irrevocable choice, I will be violating the Ind AS. Are you able to follow? Yes.
Yes. Yes.
So therefore, there is a transition provision that is available in this regard. There is a transition provision that is available in this regard. Okay. Are you able to understand? Yes.
Yes.
So
Yes.
Ind AS has no similar clause, but take to P&L. But choice is irrevocable. For a company availing option as per AS 11, transitioning to Ind AS, what to do? That is the question mark. Okay. So now, looking at this situation, a transition provision has been introduced. A transition provision has been introduced. What is the transition provision? Existing loan. FCMI TDA option availed. That is option 2. Then, if you have availed FCMI TDA option, the transition relief that is given to you is continue to accumulate gain or loss in FCMI TDA on transition date and thereafter, even thereafter. So this is basically carve out from IFRS. Are you able to follow?
Yes.
Yes. So
Yes.
if you are accumulating FCMI TDA, transition relief also allows you to continue accruing the differences in FCMI TDA. Are we okay? Yes. And even thereafter. This provision is not there in IFRS. Okay. Because IFRS, those who were following earlier, those people also did not have such a clause in their Companies Act. This was only India specific. So that is why this carve out also is India specific. Are you able to follow?
Yes. Yes.
Yes. Okay. Now, let us suppose. So this, acha, carve out is there, option is there. Can I avoid this option and say, ठीक है, but transition हो रहा है, so I will go for full hit to the P&L. I will go for full hit to the P&L. That is allowed because you can say that it is a policy change. Pursuant to the policy change, I will continue with this. So therefore, you can follow that and take the impact to the P&L immediately on transition into Ind AS. Are you able to follow?
Yes.
Yes? Okay. Now, let us suppose date of transition 1/4/2022. I have forex gain, loss, whatever it is. Okay. I put this under two options. Option 2 taken under previous GAAP. Option 1, this is taking it to P&L. Okay. Under previous GAAP, gain or loss has been taken to P&L. Are you able to follow?
Yes.
Now, If I have taken it under previous GAAP under option 2, I will be having two scenarios. There is an existing loan, there is a new loan. Existing loan taken on 1/4/2015, having a tenure of 20 years. Is it okay?
Yes.
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 New loan taken on 1/4/2024, 10 years. Okay. Taken before transition. Taken after transition. Okay. Taken before transition, this becomes previous GAAP. Yes? Yes or no?
Yes.
So, if there is an existing loan on the date of transition and pursuant to that loan, I had taken an option of FCMI TDA, then even under Ind AS, you can continue with previous GAAP treatment. That is, park it in FCMI TDA. Are you able to follow?
Yes. Yes.
Or you can always say this is a change in policy. So therefore, Ind AS P&L over balance tenure. That means henceforth whatever gets accumulated, they will put it in the P&L. Are you able to follow?
Yes. Yes. Yes.
So this is your relief. Clause A is your relief. Clause B is what you would do normally. Are you able to follow?
Yes.
Now, if I have taken loan after transition, will FCMI TDA option be available?
Yes.
क्यों होगा भाई? Once you have transited on 1st April 22. Loan taken 1st April 24. So what is your framework now? Is it previous GAAP or Ind AS?
Okay. Ind AS for new loan, it will not be yes
Ind
available.
AS. And because it is Ind AS, what exactly will be your treatment? Ind AS 21 only. No other option. Ind AS 21 only. No FCMI TDA choice. So you will take the differences to the P&L. Are you able to follow?
Yes. Yes.
Yes. Now, option 1, I selected previous GAAP. I selected previous GAAP. Okay. So gain or loss would go to the P&L. Okay. Now, here also, existing loan, new loan. Acha. Existing loan before transition. What are you going to do? Here, there is no FCMI TDA. The difference was taken to the P&L. So existing loan के साथ आप क्या करोगे on the date of transition?
There will be no change.
No change. Taken to P&L only. Under Ind AS. New loan
This will also go to P&L.
taken to P&L only. Under Ind AS. Are you able to follow?
Yes.
So To conclude or to give a summary, are you able to follow?
Yes, yes.
Previous GAAP, Ind AS. Okay. Previous GAAP for the loan, I was following option 1. What is option 1? P&L.
P&L.
Yes. Option 1, when I move to Ind AS, I will continue to be in option 1. That means I will take the hit to the P&L. Yes.
Yes. Yes.
Is this allowed?
Yes.
Answer is yes. You are complying with both the standards in words and in spirit, fully allowed. Previous GAAP, option 1. Ind AS, I want to move to option 2. So previous GAAP, I was taking the hit to the P&L. Current GAAP, I mean in Ind AS, I want to accumulate it in FCMI TDA. Are you permitted?
No, no, no. Not allowed.
नहीं. वो relief किधर हो गया? You are asking something which is not there in Ind AS at all. Right? So this is not allowed. Any doubts so far?
No, no.
Okay. Previous GAAP, I had taken option 2. That means accumulate in FCMI TDA. In Ind AS, I want to continue with option 2. Are you allowed?
Yes.
Yes. This is allowed. This is a relief. Any doubt so far?
No doubts.
Option 2, you want to move it to option 1 under Ind AS. Are you permitted?
Yes.
Yes. Because you are doing something which is extra. You are doing something which is extra. Any doubts? No doubts? All clear?
Clear. Clear. Clear.
Yes. All right. Fine. ठीक है. Next. Okay. Now, B. FCTR. You remember FCTR was being created under AS 11?
Yes. Foreign
Yes.
currency translation reserve.
Foreign currency, not under Ind AS 21, under AS 11.
Yes, yes.
You used to create it for non-integral operations. Do you remember?
Yes.
इंटीग्रल के लिए हम नहीं बनाते थे. Okay. All right.
Yes.
Now, under Ind AS 21, do I have the concept of integral, non-integral operations?
No.
Under Ind AS 21, we have the concept of functional currency. Yes.
Yes.
So therefore, the basis of treatment itself is different under Ind AS. So therefore, carrying the previous GAAP value into current is just not possible. Either previous FCTR you restate to current FCTR, or you make it 0 and start afresh. But no previous GAAP carrying value is permitted. Are you able to follow?
Yes.
So FCTR created under integral, non-integral operations. AS 11. FCTR arose on non-integral operations conversion. Are you able to follow?
Yes.
Under Ind AS 21, functional currency concept introduced. Functional currency concept is introduced. Is it okay?
Yes.
Therefore, retrospectively restate FCTR as per Ind AS 21 requirements, or on transition reset to zero. Reset to zero on transition. Are you able to follow?
What is this resetting of to zero?
Matlab, when you are moving from AS regime to Ind AS, your FCTR balance is appearing. Either you restate as per Ind AS 21 principles, or when you bring it here, make it zero. जब आप converge करोगे, then in the Ind AS balance sheet, opening balance sheet that you prepare, FCTR value will be zero. Is it okay?
Yes, it will be zero, but where will that go to?
Retained earnings. और जाएगा कहाँ? It will hit your retained earnings, right?
Okay.
It will be zero means I'm taking the impact in retained earnings. I cannot call it as FCTR anymore. Okay?
Yes, yes. Okay.
Previous gap carrying value not permitted. Okay? So that takes care of your FCTR, and with that it takes care of your Forex impact. Any doubts so far?
No, clear now.
All clear? Okay, fine. Okay. So now let us start up with illustration 13. Y Limited is a first-time adopter of Ind AS. The date of transition is 1st April 20x5. On 1st April 20x1, that means before date of transition, it obtained a 7-year US dollar 1 lakh ka loan. It has been exercising the option provided in para 4646A and has been amortizing the exchange difference in respect of this loan over the balance period. So previous gap, what was the option it was availing? Option 1 or option 2?
Option 2.
Option 2. Option 2 can be continued in Ind AS regime?
Yes.
Yes, that is the transition relief. Can I go for option 1 in the sense I can hit the P&L in Ind AS regime?
Yes.
Yes, both are available. Okay. On the date of transition, the company wants to continue the same policy with regard to amortizing exchange differences. Whether the company is permitted to do so, that means from option 2, it wants to continue option 2. Yes or no?
Yes, it can. Yes.
So can it do that? Answer is yes. Answer is yes. Okay. Now, If it wants to take P&L option, that is also eligible.
Yes.
Existing balance in FCMI TDA will be moved to retained earnings. Existing balance in FCMI TDA in that case will be moved to retained earnings. Are you able to follow?
Yes.
Yes. All right. So illustration 13 हो गया. Y is a first-time adopter of Ind AS. Date of transition 1st April 20X1. On the date of transition, there is a long-term foreign currency monetary liability of 60 crores. $10 million converted at an exchange rate of $1 equals rupees 60. That 21 could be a printing mistake. The accumulated exchange difference on the date of transition is nil, since Y Limited was following AS 11 and has not exercised the option provided in para 4646A. So, previous GAAP, option 1 or option 2, what was it following? What was it following under the previous GAAP?
Option 1.
Option 1. It was taking the hit to the P&L. The company wants to avail the option under para 46A prospectively or retrospectively on the date of transition. How should it account for the translation difference in respect of this item under Ind AS 101? Can you take FCMI TDA option 2 now if it was option 1 earlier?
No.
No. So not permitted. So how should it account for? Take to P&L. Take it to P&L. Okay.
Yes.
Option 2 under Ind AS not permitted. Option 2 under Ind AS is not permitted. ठीक है? Next. If you are stuck anywhere, please let me know. Okay.
It's clear. Clear.
It's clear. Okay. Question 3. Y Limited is a first-time adopter of Ind AS. Date of transition 1st April 20X5. On April 1, it obtained a 7-year $100,000 loan. So this is before the accounting policy as per previous GAAP and follow requirements of Ind AS 21 with respect to recognition of foreign exchange differences. Is the company permitted to do so? What do you think? Date of transition, option 2. Yes or no?
Yes.
Now it wants to avail, it wants to discontinue the policy and wants to follow the requirements of Ind AS 21. That means what? Now it wants to take everything to the P&L. Yes or
it
no?
can do. Yes, it can do.
It can do. Option 1 permitted. Now, how will you do this accounting? How will you do this accounting? How will I do this accounting?
Take the hit to profit and loss.
That is henceforth. But you have a balance in FCMI TDA, right? So, opening balance, you are already having something accumulated here. Yes or no?
Yes.
So, this I will move to retained earnings. Yes?
Yes. Yes. Yes.
And henceforth, whatever is there, you can go for option 1, followed by option 1. Is it okay?
Yes. Yes.
All right. Fine. Next. Now we move on to fixed assets. It may appear I'm doing it haphazardly, but trust me, everything will be covered. Okay? Because कभी illustration 2 चल रहा है, कभी 13 चल रहा है. So it is very natural to feel that way. Okay?
It's okay. Everything is understandable.
Okay. So that is done. अभी क्या चाहिए हमको? Fixed assets. Yes. Property, plant, equipment, intangible assets, and right of use assets. Okay. Now see, with respect to property, plant, equipment, you have the following options. Measurement basis as per the respective standards applied retrospectively. Applied on an item by item basis. For example, plant A can be measured applying Ind AS 16 retrospectively. Plant B can be measured applying the fair value or revaluation options mentioned below. Fair value at the date of transition to Ind AS. You can take this. This measurement option can be applied on an item by item valuation, item by item basis, or previous GAAP revaluation. If it was as at the date of revaluation, broadly comparable to fair value, cost, or depreciated cost. This measurement option can be applied on item by item basis or previous GAAP carrying amounts provided no change in functional currency. This can be applied only if applied to all of the asset classes and items therein. This can also be applied to investment property. Are you able to follow? Yes.
Yeah. Yes.
So this is your relief. This is the relief. What is the relief? Whatever is the previous GAAP carrying amount, yaad rakho, they are saying carrying amount, not gross block. They are saying the net WDV. Whatever is there, that can be applied. That can be applied. Are you able to follow?
Yes.
Yes. If you do not want to avail this relief, then you do the accounting retrospectively. Retrospectively kaise karoge? Fair value at the date of transition to Ind AS. You can do it this way. Or previous GAAP revaluation. If such revaluation was broadly comparable to fair value, cost, or depreciated cost in line with other Ind AS, adjusted to reflect changes. Okay. Both these items, you can take it on an item by item basis. But when you come to the relief, that is not item to item. That has to be applied to all asset classes and all items mentioned therein. Are we okay to go?
Yes.
Are we okay to go? Yes?
Yes. Yes.
All right. Fine. So now, let us look at illustration 8. Yes. X Limited is the holding company of Y Limited. X Limited is required to adopt Ind AS from 1st April 20X1. It wants to avail the optional exemption of using previous GAAP values in respect of PPE. So this entity wants a relief. Whereas Y wants to use fair value. This entity wants to use the fair value. Are you able to follow?
Yes. Yes.
Yes. On the date of transition. Examine whether X can do so for its consolidated financials. Also examine whether different entities in a group can use different bases for arriving at deemed cost in their respective standalone financial statements. Okay. First one, X Limited converging from AS to Ind AS. Can it take previous GAAP value for property, plant, equipment?
Yes.
Yes. So that part is answered. Y Limited in its standalone, can it go for fair value?
Yes.
Yes. Nothing will stop it. Okay. But Y Limited for purposes of getting consolidated into X Limited, can it take fair value or should it go for the previous GAAP value?
I think it will have to go to previous gap
It would
value.
have to go for previous GAAP value because parent has a different set of what you can say. Parent has a different policy which is followed. Subsidiary has a different policy which is followed, but on consolidation, the policies should match each other. So therefore, the subsidiary is tweaked. The subsidiary is tweaked. Are we able to follow?
Yes.
Yes. Okay. So that takes care of illustration 9. Standalone, X can take the relief. Standalone, Y can take the fair value. Consolidated, X will continue with the relief. Consolidated, Y Limited will have to take the relief and restate its figures. Restate its figures using previous GAAP. Are we okay?
Yes. Yes.
Yes. So that resolves illustration 8. Next. Illustration 9. For the purposes of deemed cost, an entity has the option of using carrying value as the deemed cost. In this case, what should be the carrying value? Which carrying value is to be considered as deemed cost? Should it be original cost or net book value? Also examine whether this would have any impact on the future depreciation charge. Tell me. What will be previous GAAP value? Will it be original cost or will it be net book value?
Net book value.
Obviously. Okay. Net book value will be the deemed cost. Okay. Next, whether this would have any impact on future depreciation charge.
No, I don't think.
No, it will have an impact in future depreciation only if you do a management assessment of useful life and update the useful life accordingly. Otherwise, whatever is there will continue in the future. Are you able to follow?
Yes.
Yes. So that takes care of illustration 9. Next, we move on to illustration 10. Second. Illustration 10. Okay. X was following cost model for property, plant, equipment till 31st March under previous GAAP. Are we okay with this?
Yes.
Ind AS became applicable for the year at beginning April 1, 20X2. On April 1, 20X1, that is date of transition, it used fair value as the deemed cost in respect of its property, plant, and equipment. X Limited wants to follow revaluation as its accounting policy for the first annual Ind AS financial statement. Whether the use of fair values as a deemed cost on the date of transition and use of revaluation model in the first annual Ind AS would amount to a change in accounting policy. What do you think? They were following cost model. Now they want to follow fair value model as the deemed cost. So by virtue of this shift, would it amount to a change in accounting policy? Yes?
I, I don't think so.
Yes, that's right. See, the change is happening pursuant to what? The change is happening pursuant to a change in the framework. Yes or no?
Yes, yes. Ind AS 101.
Yes, from AS to Ind AS. The change is not happening pursuant to a policy change that is affecting only fixed assets. It is a policy change that is affecting length and breadth of the company's financial statements. Yes or no?
Yes, yes.
And therefore, when I move from cost to fair value in such a broad framework that is getting changed, it will not be what you say, uh, it will
Change
not
in
be a
accounting
policy
policy.
change for fixed assets, but it is only a starting point for doing the accounting. Yes or no?
Yes,
कि आगे चल के this will be my fair value. That is the interpretation that will be assigned to it. ना कि you will assign कि this is a fair value which is a new policy change for assets. Answer is no, it's not. Is it okay?
yes.
Yes. So whether use of fair values, no, it is not a change in accounting policy. Okay. So that takes care of. ठीक है. Next. What I want you to do is try this out for homework. Question number 4. Okay.
Okay.
Try this one question out for homework. I think that is the only thing which is there before we then move on to the next one that is there will be business combinations. Yes. So with that, I think any doubts, any clarifications?
Clear. Clear everything.
So we have concluded what is Ind AS 101 all about. It is a summary of all that you have learned. You have learned what needs to be done for each item of financial statements. Ind AS 101 tells what you should not do. It gives proxy values, surrogate values, exceptions, exemptions, reliefs when you are doing the transition. The intent is to minimize the discomfort during transitions by providing exceptions. Okay, by providing exemptions. All right. So this is the main intention. Any movement that happens in the values of assets, liabilities will be taken to the reserves. Okay, this is because your operations, your profit should not come from convergence. That is the fundamental requirement. Okay, so that takes care of your introduction. When we say transition, it means recognizing items which were not recognized in previous GAAP, de-recognizing items which were recognized in previous GAAP. Then it also means uh, applying measurement principles to previous cap to the items that you are converting. Is it okay? So these are the things, the general things that we had, and then we saw two specific transition, actually three. First one is ESOPs, where if the options are vested, exercised, nothing to do. If options are vested, not exercised, transition relief to take the same value of stock option outstanding as SBP reserve, or you can do a fair value restatement from the grant date. If it is an option whose vesting period is still in force, then what you will have to do is you will have to uh, do a restatement of the fair value on the grant date with the best available information that you have, calculate that and do the accounting. Then we saw foreign exchange FCMI TDA, if that option is availed, you can carry it forward as a transition relief. In all other cases, you have to do a mandatory uh, option 1 applicability of taking the differences to the P&L under the Ind AS regime. So that takes care of Forex. Plant and machinery, you can go ahead with previous GAAP carrying values. It will not be regarded as change in policy. It is only a baseline for starting your work. Are we okay with this? Yes.
Yes.
So go through whatever we have done. See if you can do question number 4. Don't leave that. Okay. So with that background, we'll just 1 second. Okay, so with that, I think we conclude our session for today. Go through whatever we have done. It's still quite basic in the initial stages. In the next session, I can do a little bit more complicated ones, that is business combinations, financial instruments, and we go for a full-blown convergence financial statements in the third class. Next class onwards, I think I can introduce you to some MCQs. Today, it is too preliminary to really introduce MCQs at this stage. So in the next class, I think we'll do MCQs covering day 1 and day 2 put together. So that should put you in a comfortable position. Okay. All right. So with that, we conclude today's session. Okay. Thank
Okay.
you.
Thank you. Thank you very much.
Thanks. Thank you. Session conclude. Yes. 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 Thanks. Have a nice day. Thank you.